So in 2021, I wrote a paper for National Affairs called Bitcoin and the U.S. Fiscal Reckoning. And we had a lot of ideas. The point of the paper was to say, to Washington policymakers at that time, that Bitcoin was not a passing fad, that it was going to be around for a very long time, and it was actually going to get more important over time. So you should become familiar with it and understand that it's basically it's thoughtfully designed to be an answer to the problem of the rising federal debt and the depreciation of the dollar because of the federal debt. And also to help Bitcoiners understand that they actually can, Bitcoiners at that time, the view was, look, we have this money, it doesn't need permission from anybody, it works regardless of whether governments care about it or not, so who cares what Washington is doing? It doesn't matter. And my argument at the time was, and I'm not alone, but it was a contrarian view, was that no, actually Bitcoin policy does matter. And we one of the things I wrote in that paper was that the U.S. government should consider creating a U.S. strategic Bitcoin reserve. The Treasury Department, I'm just going to quote this because it's relevant to all this. The Treasury Department should consider replacing a fraction of its gold holdings, say 10%, with Bitcoin. This move would pose little risk to the department's overall balance sheet, send a positive signal to the innovative blockchain sector, and enable the United States to benefit from Bitcoin's growth. If the value of Bitcoin continues to appreciate strongly against gold and the US dollar, such a move would help shore up the Treasury and decrease the need for monetary inflation, meaning printing more US dollars to soak up the debt that we're issuing. Fast forward a couple years later, or was it 1 year later, David, you and your colleague Grant McCarty started the Bitcoin Policy Institute, and you published a paper just very recently, which I had a chance to contribute in a small way to detail what this idea could look like. President-elect Trump in what month was it? June at the Bitcoin conference in Nashville. Endorsed the idea of a Bitcoin strategic reserve, said that if he were elected president, he would stop selling the Bitcoin that the government was seizing from criminals and use that as the beginning of a stockpile. At the same conference, Cynthia Lummis, senator from Wyoming, basically said that she was about to introduce legislation to create a Bitcoin strategic reserve, which the Bitcoin Policy Institute also chipped in on advising on. And so what was just a paragraph in that paper 3 years ago is now a real idea, and there's a lot to think about in terms of exactly how this idea would work. And so I want to throw it over to you, David, to walk us through with the work that the Bitcoin Policy Institute has done on this topic and all the different. There's a number of different ways a Bitcoin strategic reserve could work. And before we get to that, like how would you actually do it? Maybe give BPI's version of the rationale as to why a Bitcoin reserve is useful to the United States.
Yeah, for sure. I think broadly there are. Well, I guess just to sort of set the stage a bit, right? When we're talking about a Bitcoin strategic reserve, and Avik is right, this idea has, at sort of breakneck speed, gone from a daydream to something that people are talking about quite seriously. At the highest level, I think there are really sort of two proposals. One is to just sort of reconstitute the Bitcoin we already have, just kind of draw a new box around it, like Avik alluded to. The US government already has a substantial Bitcoin holding as a result of seizures. It's all custodied by the marshals. It's about 210,000 Bitcoin. So one iteration of the idea is just to say, we're going to transfer those Bitcoin to the Treasury Department. We're going to sort of call it a new thing. There will be sort of positive signaling value to that, but we're not going to actually, buy new Bitcoin. That's what Trump pledged to do in Nashville.
And the U.S. right now is what, the sixth largest holder of Bitcoin in the world or something like that?
Yeah. So we've got, if you include our sort of citizens, more Bitcoin is held or custodied in the United States than anywhere else, which is sort of another note. The other iteration of this idea, which is a bit more exciting, is that the U.S. government could, via a number of mechanisms, selling off gold. There's been talk around, Trump doing this, via executive order, like leveraging the exchange stabilization fund that was started as a part of the Gold Reserve Act of 1934. Basically, we could either pass a law, or the government could use, or the president rather, could use administrative action to acquire Bitcoin and purchase it. There are, I guess, probably two main reasons I think this is like a strong idea, and then one sort of concern or risk that I think is important to highlight. The first is just the pure signaling of all of this. I think it's quite obvious at this point that Bitcoin is not going away. And unlike a lot of sort of technology, unlike the birth of the internet, where we took a lot of deliberate steps, like we repealed bad laws, we invested a ton of money into the internet, and we really made a conscious policy decision to foster internet research, development, and business in the United States. We've seeded a lot of that with respect to Bitcoin and cryptocurrency abroad. So I think there's one thing that's just sort of the pure signaling of this, of just like endorsing Bitcoin as a good idea, as something that generally speaking aligns with American values, that the sort of recognizing that the network's just existence is sort of accretive to U.S. interests. And then there's sort of the more like monetary arguments that it could actually improve the credibility of America's fiscal position to shave off a bit of our gold holdings and own Bitcoin. If Bitcoin were to, say, approach gold's market capitalization, which at this point I don't think is unreasonable, that's sort of the pitch is that it's digital gold, then America would gain disproportionately. American citizens would gain disproportionately. We would make more money in tax revenue. We would have some option value if that Bitcoin did appreciate. But it's crazy that we were talking about this as a sort of moonshot idea, and now I think one of the things that does need to be talked about is the risk that we go too far. There's, I think, a real needle that we have to thread between a strategic Bitcoin reserve having sort of positive reflexivity with respect to demand for treasuries, where the presence of Bitcoin on our balance sheet makes U.S. debt like more attractive, and going too far, and almost triggering a degree of negative reflexivity. If we go too fast, we try to buy too much Bitcoin, there is a real risk that that sends the wrong kind of signal to markets internationally. And so I think there are a number of good reasons to do a strategic Bitcoin reserve. I honestly think the amount is less important than just sort of doing it. Like there's a phrase in Bitcoin, people say, getting off zero. And I think that to me is like the most important thrust right now.
Great. And I should also mention that you're visiting fellow at FREOPP, one of your more important titles.
That's true.
Along with Grant. So Grant, go ahead. Here's your...
Oh, yeah. I'm also a visiting fellow at FREOPP, and I'm focused on energy. I think to David's point, how we go about accumulating Bitcoin. My first thing is the federal government should stop selling Bitcoin. I don't think they've been actively doing that now, but we should definitely stop doing that. I feel like that part skirts a lot of the other concerns that could arise. And then, how do you go about doing it? I think like the bad form of this argument is some idea that's like, we're going to pass a bill and it's going to say we're going to buy this much Bitcoin at this at this pace, over this time period, and people think, okay, I'm front running the U.S. government by buying Bitcoin at this very moment. I don't think in practice that's how that's going to play out. It would need to happen. I don't know exactly how you want to structure all the contracts. One thing that's exciting and interesting to me is, we have so much of the mining capability here in the United States. We really benefited from China kind of ongoing on that and bringing those assets here. And I think similarly, again, figure out exactly how you want to do this, but we would purchase Bitcoin from American miners, help to kind of facilitate the continued development of that industry, as well as encourage the development of more energy infrastructure. By getting, we have the AI people, they're very interested in how we can make it easier to build new energy infrastructure, building more energy infrastructure. I think as the Bitcoin industry continues to grow, they can play similarly a very positive role in doing that.
Daniel, you are a state legislator in Montana. Montana is a place where Bitcoin mining is happening. Tell us, as a state legislator, how do you think about Bitcoin mining? There was, It's died down a little bit, but for quite a long time, one of the principal complaints about Bitcoin was the complaint or the criticism or counter argument was that Bitcoin is using a lot of energy for Bitcoin mining. How are you seeing that play out in Montana?
Yeah, I think first off, I just want to say there is a unlimited supply of energy in the world, and that's what blows my mind because we just haven't built what produces the energy. But we have the land, the resources to build all types of energy production. Sadly, industrialization of America, that concept died about 50 years ago, and I've served in the legislature it's my 6th session. Chairman of House Energy and now Senate Energy and Technology Committee, passed the strongest crypto bill in the nation for pro-mining, saying, yeah, we need to increase demand and increase, if we have more demand, then we'll have more energy development. And that can happen. Of course, we have problems with permitting, which is a challenge, but I also in Montana, we're citizen legislators, so not only do we work on laws, we have jobs. In my job, I'm an energy developer, so I understand the nuances on that side of things as well. So I'm only like 7 people in Montana, which is awesome, but I think my favorite part is we set the national standard on where we'd like to go in pro-mining legislation with the vision of where we could end up. We just hope that the rest of the nation sees our little flag going up signaling this so then they could follow our train of thought. I got a little distracted on your question, though.
No, it's all right. So this is a relatively pro-Bitcoin panel, and I should acknowledge that maybe not everyone in the room is necessarily pro-Bitcoin. And so I want to let's maybe take a step back and say, why is this something that the government should be involved in all? Bitcoin, if you're a critic or a skeptic, you might say, well, Bitcoin, who cares about Bitcoin? Why should the federal government even bother with this? It's magic internet money. It doesn't really make any sense. It's like a video game. Why are all these geeks, crypto bros running around saying that the government should own Bitcoin? Why is it sustainable? Why does it have legs?
Yeah, I mean, because I think the fundamental premise is just wildly revolutionary. The idea that you can send money to anyone, anywhere in the world in a way that can't be censored, frozen, stopped is quite profound. I would draw a lot of analogies, I think, again, to the early days of the internet, where you had this open protocol for the exchange of information, which presented a ton of risks. There was a reason why it was illegal to do commerce online until 1991. You used to have a .mil or be required to have a .mil or a .edu address to use it because people were worried that an open protocol for information exchange would allow terrorists to communicate, would allow cyber criminals and money launderers and bad people would use it. And I think a lot of the same concerns are there with Bitcoin, which is this open protocol for value exchange rather than information exchange. But I mean, I think one of the biggest reasons it's a priority for the federal government is because at these rates, I mean, some of the earlier concerns that I think people had about Bitcoin is will this be a tool for people to evade sanctions? There was a lot of chatter when Russia invaded Ukraine of would they use Bitcoin to denominate oil sales and sort of circumvent wholesale Western sanctions. And look, I'm a huge Bitcoin advocate, but to be honest, the only reason they didn't do that was because of Bitcoin's liquidity. Russia's a large country, and the only thing stopping Bitcoin from being a wildly useful means of evading sanctions is the size and the liquidity, which empirically is going up and to the right substantially. And I think the importance of what happened in the aftermath of Russia's invasion of Ukraine cannot be understated. The level of sanctions that we put on that country forced every nation in the world that is at risk of being sanctioned by the United States to take a hard look at their balance sheet and think, okay, well, if they can do this to Russia, they can do this to us. And we've seen that reflected in the central bank allocations of countries whose values are a bit maligned with our own. Our adversaries are selling U.S. treasuries, they're reducing their dollar exposure, and they're buying more gold than ever before for precisely this reason. They're hedging against sanctions risk. And so, I mean, we published a paper a few weeks ago, not on the strategic reserve, but on the sort of rationale for why central banks may justify modest allocations to Bitcoin. The truth there is that the countries that are maybe most attracted to buying Bitcoin are those countries that are most at risk of being sanctioned by the United States government. And so what I find sort of interesting in all of this is as gold sort of monetizes, well, let me put it this way instead. I think if our principal adversaries are sort of increasing their gold exposure, we have a really interesting opportunity to sort of counter move by building up greater Bitcoin exposure. If governments and states want to use this technology to try to circumvent sanctions, to try to divest from sort of the legacy sort of global financial order that we've erected and led, that's going to happen sort of regardless of U.S. public policy. The only question is, can we position ourselves to benefit economically from that shift? And the nice thing is, we're already sort of winning. Like if Bitcoin 10x'd in value from here, given the current geographic distribution of ownership, America would financially benefit like orders of magnitude disproportionate to our adversaries. So, and it's a bit of a convoluted thought, but I guess the sort of TLDR is that it's becoming increasingly geopolitically relevant, whether you like it or not. We can't stop or like shut down Bitcoin. So the policy question is not, is Bitcoin good or bad? The policy question is, how do we set ourselves up to maximize the benefits of this? And I think embracing it is kind of the only logical step.
There are rumors that there are other countries that are accumulating Bitcoin stockpiles. I mean, obviously we know about El Salvador. I think Bhutan is also in the
Bhutan has about $1 billion. There are, I think we're going to be hearing some interesting announcements in about mid-December as far as some Middle Eastern countries that have been buying with size. So yeah, I mean, I think we're going to continue to see sort of countries make those announcements. Yeah.
And I think there was a state recently that passed a Bitcoin reserve bill. I can't remember which one. It was like Texas or Utah. Or
I heard one was trying it, and like the state level is its own mess of attempts, because like a lot of states, most have debt. Our state just paid off its debt, but also it's still quite the controversy to say you want to have precious metals in your state and hold on to those. And then the question is, as a legislator, which is even for this issue, is should we stockpiling at all? Of course, the federal government is its own beast. But I want to answer your question, too, that you gave him a shot at answering. There's about 20 million Bitcoin, because 1 million has yet to be mined. About 3 million of that's been lost. 200,000 of that is owned by the U.S. government. And there's only so much that will ever exist. So that's a really interesting factor for those who don't know much about Bitcoin. So there'll be 17 million, right? Ever to be obtained, and a lot of that will be lost over time. So you add that factor. So my question is more, if you were living 5 years ago, who here knows that in 2024 gold would hit an all-time high, real estate would be hitting an all-time high, our federal government would be hitting $1 trillion in interest they have to pay in debt a year? What other factors are there, right? There's all types of things. Our oil prices would be here. Our stock market would be here. Nobody knows that, which is why you should always maximize your diversified portfolio. And that includes our government. If you're going to stockpile, you should have a very well-rounded portfolio, because you never know what's going to happen. You could create a new technology tomorrow, or maybe not you, but someone could, that has a method of creating gold, right? Probably not likely, but still possible. So when you don't know what's going to come, you should have your eggs in all types of baskets, and that is a very basic method of thinking, which can apply to this. I don't know if it does at the federal level, but I think that's probably their best argument.
Yeah, 5 years ago is kind of a blink of an eye, actually, in presidential politics. Bitcoin was at about $8,000 5 years ago. Last week, it went up $8,000 in a single day. It's now at $93,000. Now, of course, it goes up and down. It's volatile, as people know.
And 5 years ago, our dollar was worth 30% more. Right. That's a big deal that no one saw coming.
Inflation, yeah. Well, let's open it up for questions. I think this is a topic where we can continue to talk about the Bitcoin strategic reserve, and I have some questions we can continue to work on that. But let's open up, see if people have questions. I'm going to hand one of these mics, maybe yours, Daniel, if you can hand it to Rebecca. Tabitha, who's coming by here, and she'll hand it to whoever wants to ask a question. Who's got a question for us?
Thanks. This isn't directly related to the stockpile, but kind of indirectly related. So the case against Custodia Bank in Wyoming, I'm wondering how this fits into the whole liquidity of Bitcoin, and then how this affects whether the government should or should not stockpile Bitcoin, what their goals are and what their objectives are, given what the Fed did with Custodia and what they're likely to do with any other bank that tries to put forward for a Fed master account, a fully digital bank like that.
Yeah, Custodia Bank, if someone wants to take this on, they weren't so much stockpiling Bitcoin. It was more a digital dollar based bank, right? But David, have you spent any time on that particular issue?
A little bit. I don't think there's not that you're suggesting this, I don't think there's like a super strong connection between the treatment of Custodia by the Fed and, a sort of policy proposal for the government, like for the Treasury to hold or buy Bitcoin. I think they're pretty separate issues. I will say, I think it would be the Federal Reserve would have a harder time making the argument that dealing with Bitcoin businesses or clients inherently makes one's bank too risky to do business with when the government is simultaneously buying said asset. So I think just like sort of, gut check says that if we buy Bitcoin as a government, the Fed's case for treating banks like they did Custodia will be markedly weaker. But I don't think I have a deeper insight than that.
What I can add is that the regulatory environment for crypto more broadly, of which Bitcoin is the oldest but not the only cryptocurrency, digital asset, is obviously going to change a lot once President-elect Trump is installed. He's pledged to fire Gary Gensler, the SEC chair, on day one, who's been one of the most hostile regulators or quasi-regulators of crypto. And the Federal Reserve is independent, of course, of the executive branch, but there are other ways to get bank charters and have regulatory viability as a bank. A Fed master account is helpful, but not absolutely required to have a bank charter. So, and I know Caitlin Long, who is the CEO and founder of Custodia, has worked on a lot of this stuff in Wyoming, and I'm sure she's very happy about the regulatory environment she'll be facing in the new administration. Just to give people background on that, the regulatory environment in the U.S. has been very, very bad. And by very bad, I don't mean restrictive of crypto, because you can start crypto projects basically anywhere in the world. You don't have to wait for the United States to give you permission to do them. But what the U.S. has done is, instead of laying out a framework saying this is legal, this is not legal, what the U.S. has done, particularly the Securities and Exchange Commission, is we're not going to tell you what's legal or not legal, but we're eventually going to just selectively decide if you get too big for your britches, we're going to sue you and say that you're illegal. And these businesses are like, well, I tried to ask you if this was okay or not. I went to your office and asked if this was okay, and you never said anything. You just gave me a lot of vague platitudes, and now you're telling me it's illegal. And so there's been enormous frustration with this regulation by enforcement model, where instead of laying out clear rules, the SEC has just said we're going to, attack people that we want to attack, as a way of the skeptical, anti-Gensler world says that's intentional, that he's doing that because he wants to blow up the industry, wants everyone to feel unsafe, and instead of having clear regulation. So in a perhaps counterintuitive way, what most people in the broader crypto industry, and this includes Bitcoin players, would say is that they actually want regulations. They want there to be clear rules of the road where we know this is legal, this is not, this is a security, this is a commodity, this is none of the above, so that investors can put money into this space and build businesses and know that what they're doing is legally compliant, because they're not trying to break the law. And that's been the major frustration. So that's, again, a separate question from Bitcoin, because really the crypto space can really be divided into, I would argue, three areas. So there's Bitcoin, the OG, which is its own thing, digital gold, an asset that is meant to be a new version of gold, a replacement for government currencies, which can decline in value. There are digital dollars or stable coins, which are basically a blockchain-based version of a money market mutual fund. Money market mutual funds, if you have a 401k or a stock portfolio and you have dollar-denominated assets in that portfolio, you'll often see a funny ticker next to that. Those things are called money market mutual funds, which are basically like US dollars, but they're actually securities that have treasury bonds and corporate debt, commercial paper backing them, so that your brokerage account can collect an interest payment, because treasury bonds have an interest coupon associated with them, so they can make a little money, nickels and dimes, off the interest on those dollars in your brokerage account. Basically, stablecoins work the same way. I'm a little oversimplifying, but not by much. And so that's like a second category that's become quite large. Tether is a big example of that, and also Circle, USD coin, which is run by Circle and Coinbase, a couple others. Then there's the broader crypto universe like Ethereum and Solana and a long tail of tens of thousands of other things, many of which are fly-by-night projects, some are real projects. But that space is very, very different from Bitcoin, which is the oldest asset, the one that has the most value, market value, and the one that I would argue it has the most significant social impact, because if the federal debt continues to rise and the US dollar continues to decline in value as a result of the federal debt being unsustainable, and more people use Bitcoin as a reserve currency instead of the US dollar, that's far more important than any other crypto project out there by a factor of 1,000, I would argue. Certainly if you talk to Bitcoin people, that's what they would say. That's a long answer to your question, but all right. Any other questions out there? We got one over here. Great.
Yeah, you said it's obvious Bitcoin's not going anywhere, but it's only existed 15 years and had widespread adoption like last five
16
or so
now.
years.
It's a teenager.
So what would be the fundamental characteristics or signals for saying it's obviously not going anywhere?
Because humans rarely, if ever, uninvent technology. I can't think of a single time really. And I mean, the short answer would be that there is no alternative for the very specific use case that I think Bitcoin solves, which is sort of censorship resistant, like money at scale. You can't do that with any other blockchain. Most, if not all of them, are like wildly centralized, are essentially just sort of, there's this sort of veneer of decentralization, but ultimately there's some actor or small set of actors who can do the same things that we can do over legacy payment rails today, like freeze someone's accounts, reverse a transaction. So if you want to send $1 billion to someone in India, like right now, in a way that no government or authority can stop you from doing it, there's only really one solution, unless you want to, put $1 billion worth of gold on a plane and fly it over there. I can do that from my iPhone for $1 in 10 minutes. So, I mean, that's like not to be like, not come off as like condescending. It's a good question. I think the simplest answer is that is revolutionary. It's a new technological paradigm for at least one very specific use case. And I can't really think of a time in human history where we've kind of gone up the tech tree and like built something that is paradigm shifting and allows human beings to do some new form of economic or social activity that we've then sort of uninvented.
Rather than uninvent, do you not think there's any space to, like, to your point, climb up the innovation tree and Bitcoin gets replaced by a more innovative thing, and then now you have all this Bitcoin and we've shifted over?
Yeah. I just to maybe rephrase the question. In the early days of social media, there was Friendster and MySpace,
right?
And eventually they got replaced by Facebook. Facebook was not the original, social media app. Is it possible in theory for someone to come up with a better version of Bitcoin that would eventually take over?
I think in only like the strictest logical sense would I say like it's possible. I think it's highly, highly, highly unlikely, namely because we've seen 16 years of attempts at building something better than Bitcoin. I mean, to date, there have been, depending on how you count, 25, 30,000 cryptocurrencies that have been invented, many of which have billed themselves as a Bitcoin competitor. And really all of them have gone to zero or failed compared to Bitcoin. I think maybe the better answer to your question, especially with the social media analogy, is sort of Bitcoin's like network effect. That there is sort of real value in the sort of brand in being first. The sort of circumstances of its founding are probably impossible to replicate. Like, you had some anonymous individual or set of individuals that just dropped this code onto an obscure cryptography forum on the internet, and it sort of just grew organically. There wasn't a company or a CEO that was marketing it or selling it to people. So I think the sort of size, the reputation, the sort of unique circumstances around its founding would be a really, really steep hill for any sort of competitor to Bitcoin to try to climb. And, to date, there's been nothing close to a Bitcoin competitor. But yeah, I mean, I think the network effect is also just super real, right? Like, I could sort of spin up, if I had access to all of Facebook's source code, I could launch, davidbook.com that would be the exact same thing as Facebook. I could even maybe tweak some features and make DMs better or make the user interface better. But the value of Facebook isn't the thing in and of itself. It's the network of people who are sort of the flywheel, who are incentivized to use it because their friends are on it. And so I think like Bitcoin has what I would contend a sort of insurmountable network effect, at least with respect to the particular use case that I think it was designed to solve, which is the denationalization of money. We may see blockchains come out that are better for day-to-day payments or that realize the vision of digital cash better. I don't think it's reasonable to assume that we're going to see sort of a digital gold use case blockchain emerge that can compete with Bitcoin.
I'm going to go the opposite way. So, like the Roman Empire, salt was a very big deal, right? And then we learned with technologies how to obtain salt at a much cheaper, faster rate. If they would have stockpiled salt and stayed around, turning into many different nations and whatever Rome turned into later, they wouldn't have done very well, right? But also if they had done it at that time for a period, maybe it was a good idea, and then they did the next thing and the next thing and the next thing. So again, I'm going to lean back on we don't know, which is the healthiest thing you can ever say about the future. And if someone does know it, ask them what they've done to prove it and maybe invest a ton of money into them or run the other way. Because there's no way we know, right? Like, it's 16 years old. It's clunky. It uses a ton of energy. There's 100 altcoins that are way better, faster, more efficient, usable, have test cases. And then there's Bitcoin that has social buy-in and now the buy-in of very large companies that are going to do everything they can to do to protect it. Just like the banks have done everything they can do to protect the dollar and make Bitcoin and cryptocurrencies fail until they realize they could actually make money and get mass adoption on it. So is it great? No, but is there buy-in now? Yeah. Is there going to be something better? There sure better be. I mean, 2009 technology, and that's the best thing we're going to come up with? I sure hope not. But again, you don't know. It's got mass adoption, and might as well, especially if we're getting it from criminal activities. Like, just throw that sucker in the bank, and if it goes 10x or 100x, great. And if it doesn't, oh well. Like, we spend more of that on bombs in a month out of DC, whatever you guys do over here, than this. So it's not like we're losing a lot. That's my take.
Yeah, I tend to agree with David. I don't think there's anything that exists right now that can actually compete with Bitcoin for what it is and what it does. And I think a lot of that has to do with the origin story of it. It's just like you try to create something that is an analog today, and it's like a Discord server somewhere with people who are early and they're getting it, and then they're going to dump it on you, this like organic accretion of value over time. And then I think people are like, the use of energy is bad. No, that's completely wrong. I think that's been a total failure in the industry, kind of buying in, the rest of the industry buying in on a fad. The connection between this exchange of value and real physical processes in the world is actually like a source of immense strength and something that makes Bitcoin distinctly different from the competitors. And then there are other people who agree with that claim, and they're like, well, I'm going to do the same thing with my own token. It's like, well, good luck getting a network effect.
Yeah, I'll make one comment, which is one criticism you hear of Bitcoin, particularly from other crypto advocates, non-Bitcoin crypto advocates, is, well, the network is slow. It's it's more expensive to send like $5 over Bitcoin. Like people aren't paying for their Starbucks cappuccino with Bitcoin. And my response to that would be people aren't paying for their Starbucks cappuccino with a gold bar either. And yet nobody questions the utility of gold. All right. So if the value of Bitcoin is that it's a store of value, not that it's, the thing you use to buy your cappuccino, then that actually is a very important feature that other cryptos that basically stop competing with Bitcoin on. That's number one. Number two, the payment rail is something that people involved in developing Bitcoin and associated chains are working on. So there's a lot of layer 2 or sidechain technologies that make Bitcoin more useful as a payment. And so if you have as the base layer, to use software terminology, this thing that really is gold, digital gold, that keeps its value over time. In fact, its value increases over time relative to the US dollar or gold or other currencies. And then on top of that, you can spend it here or there using these layer 2 or sidechain technologies. Then there's really no other kind of competitor that can compete with that.
Yeah, and I would have a brief addendum as well to your question, which is I want to be clear to the representative's point about predicting the future. My contention is certainly not that Bitcoin Senator, my bad. To riff on the senator's comment a bit,
That was a low blow.
Yeah. Well, look. My argument is certainly not that Bitcoin has no chance of failing outright. Like, look, this started on an internet forum as like a way. You go back to the early days of Bitcoin, the vibe was very different from what it is now, where you've got a lot of like opportunistic sort of hucksters basically saying this is how you get rich, and it has a 0% chance of failing. That's obviously laughable and ridiculous. Like the origin of this was always a social movement. Like, can we sort of meme a new store of value into existence? So I guess my addendum to your question would be, if Bitcoin fails, it will not be because of a competitor with like sleeker features or, some better throughput on the blockchain. It will be because the sort of general social endeavor of trying to assign sort of a monetary premium to a digital commodity turned out to be a bad idea. But I think the senator is making a category error in sort of discussing Bitcoin's ability to be sort of technically outcompeted, because that's never been the argument. The argument about Bitcoin is, you make the same thing about gold, right? Like if you strip away all of its raw economic utility and value, whether it's for circuitry or jewelry, you don't get anywhere near $14 trillion, which is the current value of all the world's gold. 40% of the demand is by central banks. It's because this metal we've decided as a society, has this monetary premium. But there's no shortage of metals that would do the same thing. Platinum, silver. The market sort of just decided that gold was the gold standard. And that was fairly arbitrary. But we sort of socially reinforced that over a long period of time. And, you could make some new metal that's like technically has better properties than gold, but gold's sort of story and meaning and sentimentality is what's tough to replace. So I think the Bitcoin failure scenario is that people decide, well, this is a dumb endeavor. We don't want to give a monetary premium to a digital commodity. But the value of Bitcoin has nothing to do with its sort of technological like merits in a way that, a fancy new 2024 blockchain could solve. I think that's sort of a silly contention.
One thing that's worth pointing out is, Bitcoin now has a market value of $1.8 trillion. If it were going to be hacked, it's been around for 16 years. The smartest cyber criminals in the world would have figured out how to do it. They haven't been able to do it, which is an indicator of the robustness of the basic technology from 2008. That, whatever its antiquity, if one wants to call 2008 software antique, has proven to be robust. One thing you hear about is, could quantum computing be powerful enough to overcome the cryptography in Bitcoin? Theoretically, that is possible, but the Bitcoin core software can also be upgraded to a higher level of cryptography that can outpace quantum computing's capabilities. So that's something that you could anticipate ahead of time and keep ahead of. So at least the known challenges, technical challenges or risks of Bitcoin are things that Bitcoiners, being fairly paranoid people who worry about the financial and fiscal collapse of the world, are attuned to and paying attention to.
I'd say you just heard two people. You got a Bitcoin absolutionist, and then just someone who says, "I can't predict the future." That's those are the two counter arguments there. I'd say maybe that's a little nerdy.
Well, any other questions? Got one right here. Great.
Thank you. So I'm still having trouble understanding, for those of us that don't own Bitcoin and don't have any interest in seeing the price go up, why the widespread adoption of it is a good thing. Obviously, it's not traceable by the government. The government seems to have gotten its hands on 210,000 of them anyway, and people are worried about regulation of it. So, I mean, if the tech tree of the government regulation continues to increase, I mean, isn't it? What problems does this solve by having more people use Bitcoin?
Yeah, I think the clearest example of where Bitcoin solves problems lies if you look in the data on where it's actually used for transactional purposes. So earlier I mentioned that if you just look at sort of the people who are investing in Bitcoin, it's largely like a Western-driven phenomena. It's like rich countries, people with disposable income, speculating or investing in Bitcoin. The more interesting data is who's using Bitcoin on a day-to-day basis. And by like a Texas mile, the people that are using Bitcoin on a transactional basis are people who live in authoritarian regimes and people who live in countries with double or triple digit inflation. And sort of for context, right, if you're sort of in like a Rawlsian, if you're born today, odds are you are born into a dictatorship where you do not have the ability to make payments or participate in markets like as you see fit. You face extreme backlash using your money for political speech, for political organizing, whether there's like moral laws and restrictions on that which you can and cannot purchase. And then you've got, about 2 billion people on the planet who live in a country whose currency is depreciating at 10% or higher a year. So I think in the West, in a country like America, we have this like wild privilege of like the dollar, right? Like all of our phones, I never use Bitcoin to pay for things. Like my Apple Pay is like fantastic. It's just super seamless and easy. And I think it's easy to lose sight of the fact that for billions of people on the planet, that's like not the case. You are sort of forced to hold, a currency like the lira or the naira that's, depreciating incredibly rapidly. And so I think the social value of Bitcoin is far more felt by people who are living lives like radically different from our own in this room. I think the value to people in the West, in developed countries, it's more the stuff that we're talking about, like an asymmetric hedge against the currency declining here. It's a speculative bet, depending on it's either a prudent investment or a speculative bet or like a hedge. You can sort of debate the utility there. What you can't debate is the utility of Bitcoin for people who live in oppressive regimes. I mean, at our conference this year, we had the leader of Alexei Navalny's foundation testify that when they were trying to run an opposition movement in Russia, the only thing they could use was Bitcoin. That they found Bitcoin not because they were interested in making like a buck off of it, but because their government froze all their bank accounts and stole all their money, and they were trying to run a political movement. So they looked at the whole suite of options afforded to them and said, well, there's this one thing that we can use to finance our opposition, and it's Bitcoin.
By the way, Bitcoin is traceable. That's how the government got its 210,000 Bitcoin, because every Bitcoin transaction is on a public database called a blockchain that everybody can see around the world who looks at the network. And there's a number of companies, but the most well-known one is called Chainalysis, which works with law enforcement agencies all around the world to connect blockchain transactions to known entities. So let's say you bought $10,000 worth of Bitcoin on Coinbase. Well, when you do that, you have to enter your social security number, your driver's license, et cetera, et cetera. You buy that Bitcoin. Let's say you take it offline into a cold wallet, but then you send it to, Iran. The government knows it was you because, there's like a hexadecimal code which is basically connected to the Bitcoin that you bought. So it's actually completely traceable. The least traceable form of money that you can send to a criminal is a suitcase full of cash. So actually, that's a better way to be a criminal than to send Bitcoin. And Bitcoin does tend to get traced. All right, we're actually out of time. So if you want to learn more about Bitcoin, talk to David, talk to Daniel, talk to Grant, talk to me, and we can continue to share these subtleties about how this may all go in the future. Thank you.